I'm going to bring in now Gabriela Santos. She's the Chief Market Strategist for Americas at JP Morgan Asset Management. So this, your mid-year outlook, what does this mean, the divergences everywhere? What exactly does that mean?
So take your manufacturing PMI survey, which on the surface, absolutely nicely above 50, accelerating and improving over the past few months. But if you look beneath the hood within manufacturing, if it's not AI CapEx,
right,
there's nothing going on.
Right.
The rest of manufacturing is kind of moving sideways, residential still soggy, so huge divergence within manufacturing and investment spending.
And even in this number, there's employment was at a record 6-month low. And I'm seeing other side articles talking about robots and bringing in, the technology. Could that also be part of what you're talking about with this big technology / AI divergence, sort of changing all the story?
At the moment, we see it primarily affecting the real economy on the CapEx side.
Okay.
So AI CapEx boom showing up in the numbers and lifting overall GDP. We think here a reacceleration in the middle of the year of around 3% second and third quarter. When it comes to the labor market, it still seems to us a bit frozen. It's still low hire, low fire, but we're watching to see if there are more sectors picking up.
High income consumers, it's there's a political side to that, when the top 20% do X amount, 50, 60%,
40%,
depending, 40%
yeah.
for, okay. And, some people, but at the same token, they're keeping us afloat. And the tax refunds, you say, have had to sort of offset gasoline prices.
Yeah, so we were expecting more of an improvement from the consumer this year because of the tax refunds. So you were supposed to see a broadening from the high income lift to the other parts of the household area. However, you haven't seen that because below the top 20%, the refunds were fully offset by the increase in gas prices.
Is it too late now? Let's just say we started with that crude oil chart. We're 72, we get a 6 handle. Let's say gasoline comes down dramatically in the second half of the year. Is it too late for the average consumer to benefit from that?
I think if we get below where we started the year, something a little bit closer to $60 or below, or meaning, a low 3 handle in gasoline, I think that would be helpful again. If not, you're still up about 30% year over year, but it certainly is helpful that we seem to be stabilizing here and
having a
prices aren't
job
going
kind of
higher.
offsets that too, right? I mean, it's painful. We got a 2.6% savings rate, so it's pretty clear people are spending even if it's at the detriment of savings.
They are, and one of the things that's caught our eye for the broader consumer, that divergence, high income and the rest, are real wages. Because inflation has now picked up, real wages have been negative for 2 months in a row. So consumers okay, it's not booming.
Let's on inflation, and I'm going to ask you about bond yields. Pulling back a little bit, under 4.5. Are bonds attractive to you here? It's more and more folks are saying maybe they like the risk reward at this level.
Yes, we do, but on the short end of the curve. That's where you've seen the biggest move higher. Take the 2-year, it's up 75 basis points this year, and it's actually 60 basis points above your cash rate, the Fed funds rate. So it's already priced a big change from the Fed to dovish to hawkish. Now, when we do look at the labor market, we don't see that strength, so we don't see demand side inflation pressure. We think inflation likely peaked in May, and we won't see those rate hikes. So we do see opportunity on the short end of the curve.
I mean, I came away, I was shocked at the narrative and also a lot of the experts on Wall Street thinking that Walsh is a hawk. I think he's working within the parameters of the rules they have now, but he's making it clear he's going to remake the Fed. And I think when he comes through after all of these committees and all these, all these committees get together, that they'll be working from a different sort of set of principles, and they'll read inflation differently, they'll read the data differently. I think he'll be accommodative.
I think investors maybe over-extrapolated the hawkishness of the Fed. And I think part of it is because we didn't get forward guidance or much of a discussion of the Fed's reaction function from this Chair Walsh. And as a result, it got filled in by the hawkish change in the dots. 9 out of 18 seeing hikes, but what we care about are the 12 voting members. And those might actually be happy just staying on hold.
I actually think the SEP set us up for positive surprises.
I think so.
Yeah. Real quick, 2 things I want to ask you about. Private credit, some Apollo headlines, redemptions are going through the roof. First quarter, second quarter. How concerned are you about a contagion effect from the PE, from private equity?
So I think there's something very specific happening in these outflows from private credit and private equity because they're very retail driven. And I think it's about a fundamental misread of what these strategies are about. So they're meant to be long-term strategies. They're semi-liquid funds.
Right.
So these gatings that we hear about are a feature, not a bug.
We've got it, but everyone's going to have to consider that. If you want to promote these to Main Street, you got to understand, this is an audience that doesn't want to hear like, hey, I need my cash today. Well, you got to wait, you know, like,
yeah, you got to know what you're
retirees.
getting into. You got to know.
I hope there's some onus though on the industry and not just buyer beware, because a lot of folks have never dealt with this before.
Exactly. You got to know what you're getting.
I can't let you go because without asking you first about international stocks. You're saying, listen, you're not bearish in America, but you see opportunities outside of the USA.
Yeah, being bullish international is not about being bearish the U.S.
Right.
We're very bullish the U.S. You have emerging markets, for example, which is another side of the AI coin, currently very concentrated on 3 semiconductor stocks you were discussing in South Korea and Taiwan. But there's more than that. Asia is really leading physical AI, robotics. That's where you actually see it being implemented. And then I would also spare a thought for Japan and Europe. Those are different themes. And actually, it's kind of good to have non-AI themes in the mix.
Yeah.
They're much more related to defense, to banks, more to the value side. So a good complement for the AI piece with the US and emerging market Asia.
Great stuff.